Stocks on Wall Street falling from record levels Friday after a U.S. airstrike killed a top Iranian military commander. For more on the markets, let's go via Skype to Rockville, Maryland, where we're joined by Clark Kendall. He's CEO of Kendall Capital Management. Welcome, Clark. So is this what we're saying, just a one-day knee-jerk reaction to the markets, or are the markets going to take this as a cue to sell off?
I think the best way to describe it is the market has moved a long ways over a very short period of time. I think the market needs a rest. It needs to move sideways. I think the airstrike has simply been an excuse to take a breath as far as what's going on in the markets.
All right. If it's an excuse to take a breath, then is it time to dip into the markets, or should some people be taking some money off the table?
I don't think you need to take the money off the table. The defense stocks have moved considerably today. Many of them, Northrop Grumman, Lockheed, Martin, Marriott, Raytheon are up, 3-4% in a down day. I think those stocks are fully valued, but there's still great opportunities in today's market.
All right. So what? They're fully valued for stay away from defense stocks at this point?
I wouldn't say so much stay away, but I wouldn't be in an urge to go buy them. I don't think Congress is going to allocate more money to defense spending. I think there are other segments of the market that have greater value.
All right. What other segments should they be looking at picking up on the dips today?
Yeah, the tips today, I go back and do the fundamental research, and things like Taylor Morris Homes, Lear Corporation, the component manufacturer for automobile manufacturers, the trucking companies, XPO and Warner. All those stocks are trading less than 10 times cash flow compared to those defense contractors are all 15, 18 times cash flow.
All right. What about travel and leisure stocks? We're seeing the legacy carriers such as American, United, and Delta taking a hit. Also, the cruise line operator Carnival. Would you be picking up those, or are those pretty sensitive given the developments today?
I think that they are sensitive, and rightfully so. They have moved back. I think we do want to see how this affects their revenues and earnings. Are people going to stop traveling, outside the United States because of the airstrike escalates? But I do like Norwegian Cruise Lines. I think that's a great company, and I will monitor that very closely. But for today, I'm sitting on my hands before I buy Norwegian Cruise Lines.
Including Norwegian, huh? All right. Yeah. The other news today is the Fed came out with its minutes and basically saying that rates are likely to stay on hold, I guess in its words, for a time. The markets seem to react negatively. The markets drifted lower after that. What's your take?
My take is I'm going to follow Jerome Powell. I mean, he basically said we have low unemployment, we have low inflation, we have low interest rates, and we still see intact, low GDP growth, 2 to 3%. I don't think the story changes just because of one airstrike overnight.
All right. So in a nutshell, hold on your positions, huh?
Hold on to your positions. I would let the market move sideways and use this as an opportunity to rebuild the portfolios. The small and mid-cap values are great opportunities in today's market.
All right, small and mid-cap. Thanks a lot for your thoughts, Clark.
Thank you, Fred.
Our thanks to Clark Kendall of Kendall Capital Management, coming to us from Rockville, Maryland. I'm Fred Kantayama. This is Reuters, and have a wonderful weekend.